Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for BizNews.com. Starting us off this morning, we have Alec Hogg and his daily wrap-up of the markets, looking at the big events both locally and internationally. Then, with petrol prices in focus today, the Minerals and Energy Department recently gazetted a decision to deregulate the price of 93-octane petrol in South Africa. Michael Appel spoke to Justice van der Spey and Enrico Ganter from Capital Energy Resources about the potential unintended consequences of deregulating fuel prices. We also then have the daily news update from our partners, the FT in London. First off, Alec, it's over to you.
Thank you, Lucy. It's Wednesday, the 3rd of August. Good morning. Well, we had red across the board on all of the prices that we put into the Daily Insider. S&P 500 index down by 0.7%. NASDAQ not so bad, a 1/5 of 1%, with a huge increase in the price of Uber, 19% higher after its financial results. Uber's in the BizNews Shift portfolio. I'll tell you more about that in just a little while. Here in South Africa, the JSE All-Share Index dropped by just under 1%. The rand, it fell across the board, 19 cents weaker against the US dollar at 16 rand 74, 13 cents off against the pound at 20 rand and 39 cents, and just 6 cents down against the euro, 17 rand and 5 cents. Brent crude was down by 1/3%, $100.20. The gold price $5 lower, 1769. Bitcoin 1/5% lower at 22,839, and the Geltec basket down 3%, 430 rand on the dot. So what's weighing on investors' minds this morning? Nancy Pelosi, who is the Speaker of the House of Representatives, has ignored all warnings from China and flown into Taiwan, met with the president of Taiwan. It's the first time that a speaker has been there since 1997. Beijing has promised countermeasures, but they haven't actually explained what these will be. Also weighing on the markets last night, it appears as though interest rates could go up another 0.75% in September. This came through two separate interviews that were done by Federal Reserve members. One, the San Francisco chairman, who said that there is nowhere near ended yet in increase in interest rates, and the other one from another member who actually said that 0.75% increase in September would be about okay. Uber delivered a surprise on the upside for Wall Street analysts, and the share price jumped 19% as a result. This will please BizNews Shift portfolio followers, as the shares have been under quite a lot of pressure since we bought into them. The revenue was up 105%, and for the first time ever, Uber has generated free cash flow, this time of $382 million. It had promised that it would do this at some stage in future. It appears to have achieved its promise well ahead of time. One of the issues that Uber was struggling with recently has been a lack of drivers, but that is now in the past. The chief executive says there are many more people coming onto the platform to drive for Uber, and the reason for this is inflation is cutting back on what they have to spend within their households. Indeed, 70% of Uber drivers now say that inflation is the reason that they're on the platform. The company still showed a net loss of $2.6 billion, but that was due to accounting issues. They had to write down the value of investments in DD Global and some of the other Asian ride-hailing services that Uber has investments into. Here in South Africa, we saw some good moves on the gold board. Harmony up 4% to 55 rand, taking its rise for the week to 10% higher. But that 55 compares with 83 rand as recently as March. So a long way to go there. Similar story with Goldfields, up 3.5% yesterday to 158 rand. It's come from 145 rand recently. However, those shares were 250 rand a few months ago. ArcelorMittal ran out of steam. It dropped 7% last night to 6 rand a share. It's still better than it was ahead of financial results, where it was trading at 4.85, but it's quite some way from the 10 rand that the stock was at in April. And it's a similar story on a number of other industrial companies. Invicta down 6.5%, its recent rally running out of steam. And then Telkom, which has been in the news recently because of the proposed takeover for I don't know how manyth time by MTN, dropped 5.5% yesterday to 41 Rand 75. So perhaps there's somebody betting that that deal is not going through after all. And to end off this morning, some good news on the fight against state capture in South Africa. The Financial Times reports that Bain and Co, the Boston-based global management consultant, has been hit with a 3-year ban for any tendering with the British government because of, quote, its grave professional misconduct in South Africa. Jacob Rees-Mogg, the Cabinet Office Minister, told Bain that the affair had rendered the company's integrity questionable, and he's not convinced that it has taken its role in the scandal sufficiently seriously. In a letter seen by the Financial Times, Rees-Mogg told James Hadley, Bain's UK managing partner, that the 3-year ban applies retrospectively from the 4th of January 2022. Quote, I trust that after 3 years have elapsed, Bain & Co. will have restored its reputation. The FT writes that Rees-Mogg's intervention came after pressure from Lord Peter Hain, the South African-born veteran anti-apartheid campaigner who had urged Boris Johnson's government to punish Bain for its behavior. Bain still has many contracts in South Africa. One wonders whether that is also going to now come into the spotlight.
And now for Michael Apple, Justice van der Spey, and Enrico Ganter of Capital Energy Resources.
Energy departments around the world, they seem to be looking to drive demand down for petroleum products. Is that correct?
Well, in the US Department of Energy recently played with the same idea of reducing fuel levies and taxes to relieve the pain for the consumer. But the conclusion which the US Department of Energy came to, it's not productive to do this because you will be stimulating demand. And the last thing you need to do in the current environment is to be taking steps to stimulate demand, which a blanket reduction of taxes and levies would achieve. So they have felt that maintaining letting the market do its job would be the better way to go. And we see that, of course, with petroleum or petrol demand in the US being down 35% already. At some point, higher prices force a rethink, and consumers and companies change their behaviors. Of course, if you're a farmer and you have fields to plow, you may not have that much choice, but there are other ways of compensating those parties who have few choices.
Enrico, it's not a popular decision to let the market do what it does, especially in a country like South Africa. You come close to elections. We've already seen the deregulation and a price cap on 93 octane being placed there. These are not always popular decisions.
Governments make these commitments, like the fuel levy or putting a cap on prices, but these things have to be very well thought through. Because it's very difficult for any government to take on market forces. Like I said earlier, this cap, I don't know if it's already been introduced in South Africa or if it's just being discussed. It's gone through Parliament now or being tabled.
Yeah, it's got 30 days for public comment.
Right. So, but all I can say is if you look at the mess we've ended up with in the UK in terms of regulated gas prices, it's not a dissimilar situation. So the government puts a cap in. It says the price can't exceed whatever. Basically, it's a political statement that kind of works if the cap is higher than the market price, because in South Africa the gasoline will still flow as long as the cap is above the price. The moment the price goes over the cap, people will stop bringing gasoline in or producing it. So suddenly you have no fuel in the country because the cap won't allow you to import fuel. Nobody's going to import at a loss. And so you go from political rhetoric where it has no impact at all. If the cap's higher than the market price, that law and the legislation makes no impact. And if it's below that, then you're going to run out of fuel in the country. So putting a cap in like that is just too simplistic. And what happened, there are ways then of managing the price where it's close to the cap. And what happened in the UK is that the smaller companies, because they don't hedge, aren't able to manage the long-term supply around a price cap. And so the moment the market price exceeded the cap, they just went belly up. And basically, people stopped supplying the gas. So again, you have the situation in South Africa where the bigger companies can manage that situation, but the small companies, smaller distributors and importers, they're unlikely to survive if the market price exceeds the cap that's set in South Africa. Then they'll just stop supplying.
So watch this space after the public comment process, I suppose. Justice van der Spey, Enrico Ganter, thank you so much for your time.
All right.
Thanks,
Michael.
Good morning from the Financial Times. Today is Wednesday, August 3rd, and this is your FT News Briefing. The third most powerful U.S. politician is in Taiwan today. Beijing's retaliation has already begun. Softbank founder Masayoshi Son says he's not going anywhere anytime soon, so why the concern over his successor? And we'll tell you about a new kind of investor. Our correspondent calls them Generation Moonshot.
If they invest and save and what they get 1% interest on their savings account, what's 1% going to buy you?
We'll bring you more highlights from this week's episode of Behind the Money, which explores why risky bets are perfectly rational to these investors. I'm Mark Filipino, and here's the news you need to start your day. China has suspended imports of more than 2,000 food products from Taiwan. The move is the opening shot in a campaign to punish Taiwan for hosting U.S. House Speaker Nancy Pelosi. Beijing considers the island its territory, and it's hostile towards any gesture that validates Taiwan as an independent country, in this case, a visit from a foreign leader. Pelosi is the highest-ranking U.S. politician to visit the island in a quarter of a century. Beijing has announced military maneuvers in response, and analysts call its ban on Taiwanese goods a massive expansion of China's economic warfare. The world's largest technology investor is grappling with the question of succession. Who will take over for Masayoshi Son? He is the founder and chief executive of Softbank. Our Tokyo bureau chief Kana Inagaki says concerns have been stoked by a series of top-level departures, including that of Rajiv Mishra. He's the head of Softbank's $100 billion vision fund.
One of the striking features to some of these departures is that it seems to happen whenever Softbank is having a shift in a strategic direction of the company. And so Rajiv leaving at this timing has also raised questions about the future of the vision fund and whether some might be thinking of doing something new again. And so if there is another strategic shift again, then it's going to be hard again to find a successor until Son is more clear about where he's taking the company.
So, Kana, what does Masayoshi Son say himself about a future successor?
So Masayoshi Son is always asked at earnings or at shareholder meetings what he's planning to do about succession. And his response recently has been quite bullish. He's turning 65 next month, but he's saying he's very fit. And so he wants to run the company beyond the age of 70. So he's saying, obviously succession is an important issue for him, but he's in no hurry to find a candidate.
That's our Tokyo bureau chief, Kana Inagaki. In the past, the conventional path towards a secure financial future in the U.S. involved getting a job, investing in a 401k, and buying a house. The 2008 financial crisis changed all of that. It shook Americans in the faith they had in the conventional path to economic stability. It also spawned a very different generation of investors. The FT's Behind the Money podcast delves into this new group called the Moonshot Generation. The host of Behind the Money, Michaela Tindera, joins me now to talk about it. Hey, Michaela.
Hey, Mark.
So, Michaela, this is a story about risk takers, a generation of big risk takers. They gamble their money on things like cryptocurrency, NFTs, things that people would, they would think twice about dumping money into.
Yeah, so our U.S. investment reporter, Madison Derbyshire, reported on this story, and she talked about this mentality that she's found, and a lot of it has to do with the economic quality of life in the U.S. and how it seems to have become harder and harder to become better off than our parents' generation. Here's how Madison puts it.
They look at the things that their parents have. They see houses and mortgages and comfortable retirements, and the financial reality of being young now can often make those things feel virtually impossible to access. You have a generation of people who are facing down being less well off than their parents if they play by the traditional rules, if they invest and save and what they get 1% interest on their savings account, what's 1% going to buy you? So people started to think okay, I have $5,000. $5,000 is never going to buy me a house. But $5,000 in Bitcoin, that could be $500,000 or that could be $5 million. So why not take a chance? The odds are better than zero.
Okay, that kind of makes sense. But I think for me, the big enabler is technology. When you think about the past few years, there have just been absolutely huge developments in financial technology, and the way that we trade is just completely different. How does that all play into the thinking of the moonshot generation that we're talking about here?
Yeah, well, it totally does. And Madison says that that's a big part of the story and of this generation of investor. It's the rise of low-cost stock trading platforms.
It's hard to tell this story without telling the story of the rise of low-cost stock trading like Robinhood, that when commissions were eliminated from stock trading, all of a sudden there was no friction in the system. There was no sense of, I have to place a trade that is going to be this successful in order to cover the amount of money it will cost me to make this trade. So it was very easy to just throw out shots. And when the market was rising, especially over the last decade, we saw a unprecedented 10-year bull run. It was very easy to make money on options because the market was only going up.
So it seems like a combination of desperation, FOMO, and just accessibility, right? We talked about the technology before, combined with the want and need to make more money. It all kind of seems like the perfect storm.
Yeah, it really does. And that was something I didn't really realize until Madison pointed it out, that there's this ability using an app, that you didn't really have years before when you would need to call up your stockbroker and make a trade. And it really takes away that barrier. And it kind of plays into, there's also, more use of social media with investing. It all just takes away a lot of barriers that weren't there years before.
Yeah, I mean, if I think about social media, the whole big storyline about this was people encouraging each other to buy GameStop stock and egging each other on, encouraging people, hold the line, don't sell, diamond hands. That kind of added fuel to the fire in a lot of ways.
Yeah, it really did. And I mean, Madison also kind of pointed out it can lead to good information rising to the top, but also misinformation rising to the top, and can also be really confusing. So sometimes it can work out for you and sometimes it doesn't.
Yeah, it's a box of chocolates. You just never know which one you're going to get. How did you feel after you walked away from the story? What was the big takeaway for you?
I was really interested in this story because I'm part of this generation too. But kind of on the flip side, my general thinking is that I'm a pretty risk-averse person. So a lot of these decisions did not really make sense to me. But then Madison said something, and it really clicked for me, why people are making these choices.
The people who are taking these big swings are doing it in a way that feels very rational to them. If you have a 1% chance of success, but the alternative is failure, the 1% chance of success is the rational choice, right? If your security or your safety or your future's on the line, big swings make sense. My conclusion was that these investors, even though I might not agree with some of their decisions, were operating in a way that was financially rational. And the problem is on a much higher policy level. The problem seems to be that we've created a generation of people who don't feel optimism about their futures.
And I mean, I, of course, think about, what might have happened if I invested in Bitcoin, 10 years ago, and maybe could have sold it when the market was at its peak. And of course, I also would have needed to have remembered my password.
Yeah, and that's not at all a guarantee. Michela Tindera is the host of the FT's Behind the Money podcast. You can hear the full episode on the moonshot economy today. Thanks, Michela.
Thanks, Mark.
You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
And that's all from the briefing for today. If you enjoyed this episode, please remember to like, subscribe, follow, and share wherever you like to listen.